It's 1:30 p.m. in Lagos, same time in London, and we're bringing you markets, insights, and analysis on Business Incorporated live on Channels Television. Here's what's coming up on the program. UK announces plans to support food security in Nigeria. And Uganda records lowest inflation in 15 months. And can the Democratic Republic of Congo lose its grip on the Cobalt markets as the electric vehicle makers make a shift to lithium? Welcome to the program. I'm Will Ibang. Let's kick off with markets as always. First up, Africa, where markets were trading at intraday with mostly negative sentiments. We see Nigeria's NGX down at intraday 0.41%, now at the 64,000 level, and elsewhere we see South Africa in the green, slightly up 0.07%. Now we flip over to Egypt, where the EGX 30 was trading down 0.29% at intraday, while we see Nairobi Securities Exchange closing Monday's session in positive territory. It was up 0.19%. Now let's go over to the Middle East, where we saw mixed sentiments at intraday. The Abu Dhabi was down 0.2%. We saw Dubai also up 0.37%. Elsewhere, Saudi was down 0.67%, and the Qatari index was up over 1.3%. Now, the Eurozone economy returned to growth in the second quarter of this year. GDP rose 0.3% and inflation fell to 5.3%. Chiponda Chimbelu joins me from Berlin. Chip, can you unpack the latest figures?
Well, the GDP of the Eurozone grew 0.3% from April to June. Now, that's 3 basis points higher than the 0% growth rate seen during the first quarter of the year. The Q2 increase was given a boost by Ireland and France and Spain, which posted better than expected economic growth rates. And inflation fell for a second month in a row, declining to 5.3%. Now we have inflation that is at the lowest level since early last year. But core inflation, which excludes energy and food prices, was unchanged at 5.5%. That means that the pressures on Eurozone inflation are still there.
Well, how could this data, Chip, affect ECB policy going forward?
Well, in a recent interview with French newspaper Le Figaro, ECB President Christine Lagarde hinted that the Eurozone Central Bank might pose interest rate hikes in September. Last week at a press conference, she had said that monetary policy makers would be watching the data very closely to make a decision. And in that interview with Le Figaro, Lagarde also said that GDP figures from France, Germany, and Spain were encouraging and support a Eurozone growth forecast of 0.9% for the year. But other economists see things differently. They say the ECB is under more pressure than its U.S. counterpart, the Fed. That's partly because they were slower than their U.S. peers to start hiking rates. And there are also different levels of inflation in Eurozone countries to contend with. For instance, there's double-digit inflation in Slovakia, and we have an inflation rate of below 2% rather, in Spain. So that's why there's been some criticism of ECB policymakers from Italy in particular. Italian officials say ECB interest rates are too high and may drag Europe into recession. And then, of course, there's also Germany to worry about. Its economy stalled in the second quarter, and it looks like the worst is not over here. Germany has an energy-intensive industry, which has very much been hurt by the loss of cheap gas imports from Russia. So it will be a drag on the Eurozone economy, and Germany's economic data will play a big role in shaping ECB policy and future rate hikes.
Well, what can we expect from markets today?
Well, European markets are expected to trade higher today as traders take cues from the Asian markets and Wall Street. But they will be kept on their toes as they watch the data with an eagle eye for potential clues as to what the decision the ECB may make regarding hiking or pausing interest rates in September. The Eurozone central bank faces, of course, a very tough balancing act of managing inflation without denting economic activity in the Eurozone dramatically. Today's data will include manufacturing PMIs from the Eurozone and some of its biggest economies, Germany, France, Italy, and Spain. And also we'll get the latest unemployment figures from both Germany and Italy, in addition to UK house prices. And then there's a bunch of companies releasing earnings, and they include Diageo, Daimler Truck, and Deutsche Post. Thanks so much, Chip, for that update. Chipanda Chimbelu from Berlin, Deutsche Welle correspondent. Thank you so much. Now we'll move over to the U.S., where stock futures were slightly below the flat line early on Tuesday as investors await a flood of corporate earnings reports. Dow Jones Industrial Average futures dipped by 0.14%. Futures linked to the S&P 500 and NASDAQ 100 futures fell by 0.25 and 0.36% respectively. However, the major indexes all ended Monday's trading session modestly higher. The Dow rose 0.28%, while the S&P 500 and the NASDAQ composite edged up 0.15 and 0.21%. For the month of July, the S&P 500 and the Dow each gained more than 3%, while the tech-heavy NASDAQ advanced about 4.1%. Now to the metals market, where gold prices edged lower on Tuesday as the U.S. dollar climbed, while investors looked forward to key economic data this week for signs on how long the interest rates could keep rising to quell sticky inflation. Spot gold was down 0.1%, while U.S. gold futures dropped 0.5% to $1,961.10 per ounce. Gold prices ended July 2.3% higher, the biggest monthly rise in 4 months. Among other precious metals, spot silver slipped 0.5%, platinum fell 0.3%, while palladium dipped 0.6%. Now, as the electric vehicles, EV makers race towards safer and more socially responsible options like lithium ferrophosphate LFP batteries, there's growing worry about the Democratic Republic of Congo losing its grip on the cobalt market. The Democratic Republic of Congo is the world's largest producer of cobalt, according to data. Now, cobalt is used in the manufacturing of almost all lithium-ion rechargeable batteries used in the world today. Chinan Dikwal, energy expert and vice chair, African Energy Council, joins me. Good afternoon, Chinan. The Democratic Republic of Congo provides up to 70% of the global cobalt supply. Thus, the country continued to hold its dominance as leading supplier of battery materials for electric vehicles, since there's a shift now to LFP, of which we see the lion's share is located in Morocco.
Absolutely. Thanks so much for having me on the call. Absolutely spot on. DRC, the Democratic Republic of Congo, has been the leader in the supply of cobalt. It's very unique to them. 70% of global cobalt supply comes from the Congo. Unfortunately, fairly recently, innovation and R&D has pushed towards LFP, which is what you were saying there, lithium pyrophosphate. So that's a new material that everybody is pivoting to. Tesla's pivoting to it. Toyota's pivoting its electric batteries to it. Ford and GM are doing the same, and a variety of manufacturers are moving towards that. So the real issue here is there's a huge risk that Congo's cobalt could become stranded in the next few years. And the government of Congo would have to wear that hat on there and start to think critically, what's the way to avert, the stranding of their minerals? Because there are huge implications from an economic standpoint for a country that depends very hugely on minerals.
Now, could you quickly explain the difference between these? You're seeing this rush you mentioned, pivoting to LFP batteries. What's the difference between LFP batteries and the cobalt-type batteries?
Great question. So I'm going to try not to be technical here, but essentially, cobalt-type batteries, use cobalt as the cathode material in a battery. Essentially, it stabilizes. It has huge advantages, particularly for batteries of vehicles where you need sharp acceleration. The sharp acceleration Cobalt in there allows the battery to release a lot more power, and ultimately you can accelerate very quickly. So that's a huge advantage of it. The problem with cobalt type batteries is there's what we call thermal runaway, and that's a risk of short circuiting. So when you're driving your car, sometimes short circuit and lead to fire. And this is general. If you look online, you see many instances where a battery of a car catches fire. So there are safety concerns, but from an operational standpoint, cobalt type batteries, which are called NMC, are by far the ones with the highest power density or energy density, and they operate far better. LFP, on the other side, which is where people are moving to, it has a lot less degradation over time. It's much safer, if you like, and it recycles better. So you can put it into landfill compared to cobalt type batteries. But generally, from an operational standpoint, batteries from the DRC, from Congo, operate far better, scores better than LFP batteries.
But I see that the need to shift it's also linked to the fact that the way cobalt is sourced from Congo, you're seeing child labor cases, you're seeing other risks, you're seeing other concerns that have been raised, by the international community. Is that one of the reasons why we're seeing this rapid shift, or is it just because of the fact that it's a new thing?
Absolutely, Will, and that's a really important point. So social responsibility is a huge factor in there. So some of the practices we've seen coming out of the Congo, some of the practices, child labor, and there's a huge conflict going on there. Some of the proceeds from Cobalt have gone into financing the civil war that's happening in the DRC and all of that. So these are some of the issues again that the international community have put on the table, and they're pivoting away from cobalt. But just to be very clear, these issues are not entirely unique to the Congo. Let's be clear about that. If you look at lithium mining, for instance, there are huge lithium deposits also in South America, and they also have the same issues. You look at nickel, you look at manganese, you look at graphite, all of these metals, even rare earth metals in China and, around the world, all of these, the mining practices, it has within its supply chains some unethical practices in there. So it's not entirely unique to the Congo, which is why there's a huge pushback from the African community around that. Yes, there are issues with it, but fundamentally, we need to put everything in context.
So, but if these countries transition from cobalt-based to LFP-based batteries, what potential implications might this have on the economy of Congo?
That's a great question. So Congo is a country with 110 million people. So much of those depend on proceeds coming out of solid minerals, critical minerals. Cobalt is not the only thing on the plate that they offer. They've got huge lithium deposits, they've got huge nickel deposits. Much of those are energy transition metals. But without a doubt, cobalt is their competitive advantage. Think about this, Will. 70% of global cobalt supply comes from Congo, from one country. So that's their chokehold on the globe. Many countries are trying to take off that chokehold and try to socialize this. And the whole move into LFP, we're seeing, yes, LFP is incredible. It opens up opportunities for Morocco, opens up opportunities for Egypt and Tunisia and a few countries. But I think without a doubt, the implications here for Congo is we would start to see social inequality and perhaps them going further into debt, because much of the minerals they have, which they put onto the market, onto international markets, much of those will become stranded, rather unfortunately.
And definitely, we shouldn't be transitioning to the use of electric vehicles at the cost of people and the environment. Thank you so much, Chinandikwa, Vice Chair, African Energy Council, for the perspective on the program.
Thank you. Thanks for having me.
Now, after the break, more updates from the commodities market. Stay tuned. This is Business Incorporated. Welcome back. Now to another commodity, which is uranium, which is a key element used as fuel in nuclear power plants to generate electricity. Global uranium prices have risen by 4.56% to $56.15 per pound in the past 3 months. The Republic of Niger, which is the 7th largest producer of uranium in the world, is currently facing sanctions, and this has disrupted global supply. Adeye Adegbusi, analyst, financial derivatives company, joins me. Adeye, good afternoon. What would be the effects on uranium prices and global energy costs now that Niger Republic is suspending exports of uranium?
Prices were already rising. It rose to about $570 per pound in early June, which was its highest level since April 2022, owing to the switch toward, greener and more clean energy. And as you said, now sanctions have been imposed on Niger. They are the seventh largest producer in the world and accounts for about 5% of total global supply. In 2021, Niger was the highest supplier of uranium to Europe, highlighting the importance of the country's minerals to the European energy sector. And now, we hear that ECOWAS has directed closure of both their land and air borders, which will potentially cause global supply disruptions and lead to higher uranium prices in the long run. And if these supply disruptions persist and uranium prices remain elevated, it will lead to a greater reliance on other alternative sources of energy, which will mean there'll be higher demand and higher prices for energy, meaning higher global energy costs. This will have a knock-on effect on the global economy. And it's possible that we could see a situation like last year where rising energy costs, drove inflationary pressures globally. So the impact of rising uranium and global energy costs will have a negative impact on the global economy.
Now, due to this crisis and sanctions imposed on the Republic of Niger, the price of uranium, we know, is expected to rise, which is rising already. This will lead also to demand for substitute energy sources. Now, the winter season is approaching and, the Russian-Ukraine war is escalating. How will this impact the shift towards alternative energy sources and oil-producing countries such as Nigeria?
As you said, the winter season is approaching, meaning that there'll be higher demand for gas and energy for heating purposes. I know this coupled with the sanctions on Niger's uranium exports will have several implications. As uranium prices remain elevated, it means that there'll be higher demand. It will prompt countries to switch to other alternative sources of energy, such as solar, wind, and fossil fuels. So, and I know as they look to diversify their energy portfolio and reduce reliance on nuclear energy. So higher demand for fossil fuels like oil and gas, especially the fact that people are looking to transition away from Russian energy exports, will lead to higher prices and to benefit oil producing countries like Nigeria. So higher oil prices coupled with improved demand for Nigerian oil would improve Nigerian exports and bode well for Nigeria's economic growth. So overall, rising uranium prices, geopolitical tensions, and the approaching winter season would lead to a faster, accelerated switch towards alternative sources of energy and bode well for oil producing countries like Nigeria.
So let's bring it further home to Nigeria. The country is estimated to have significant deposits of uranium across several states. And we have Adamawa, Bauchi, Bayelsa, but there is currently no exploration or mining occurring in the country. How far away is Nigeria from utilizing uranium for nuclear energy?
I believe it's safe to say that Nigeria still has a long way to go before harnessing nuclear energy. Many countries spend decades, just from the initial planning phase to the commencement of operations of a nuclear facility. Because a nuclear plant requires extensive planning, research, infrastructural development, just to begin operations. And with this, Nigeria is far away from utilizing nuclear energy, especially with the fact that we do not currently mine or produce uranium, and also the fact that nuclear energy requires certain conditionalities. Firstly, there's a lack of financial and infrastructural facilities, also lack of skill power, and also the fact that nuclear power requires there are also safety and security concerns, especially with the fact that nuclear power requires utmost attention and so as to avoid mistakes, that could lead to disaster, as evidenced in the Chernobyl incident in 1986. So with this, it is a gradual process, but Nigeria is a long way from achieving or utilizing nuclear power in the country.
Thank you so much, Adeya Degusi, for that update. We do look forward to when Nigeria can actually harness this uranium deposits and probably channel it to producing energy for the country and, nuclear power, which is greatly, in demand right now. Thank you so much for joining us on Business Incorporated.
Thank you for having me.
Now, moving on to other stories, Uganda's annual headline inflation, which includes items in the consumer price index, has declined to 3.9% over the last 12 months, the lowest inflation rate the country has recorded since February 2022. According to the Uganda Bureau of Statistics, UBUS, the decline is attributed to drop in wide range of commodity prices, especially food and fuel. At the same time, annual core inflation slowed down to 3.8% in June when compared to 4.8% in the previous year. UBUS says the current level of annual headline and core inflation are below the Bank of Uganda's policy target of 5%. Now, the UK has announced plans to support food security in Nigeria. The UK Foreign Secretary James Cleverly made this known during his visit to Nigeria as part of a 4-day Africa tour. In a statement, the Foreign Secretary says the UK pledges to make Nigeria's agriculture sector more resilient to climate change. Mr. Cleverly is set to announce a $10 billion UK-backed facility in the country in partnership with finance company InfraCredit that will unlock funding for sustainable and climate-friendly infrastructure development projects. Also, a £55 million PropCom Plus contract, a UK international climate finance program which aims to support the transformation of Nigeria's rural economy, and a £2.89 million grant which supports more than 4 million people across Nigeria to adopt and scale up sustainable agricultural practices. The £55 million is the first contract signed as part of the £95 million PropCom Plus program announced at the COP27. And that's it on Business Incorporated. Join us tomorrow for another edition. We'll be here live to provide you with updates on business and the world of business. I'm Will Ibong. Stay tuned and see you tomorrow.